Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello and welcome to a new ATFX video. My name is Gonzalo Cañete and I'm here to share with you a quick review of the week. The main events happened this week. The effect of those events on the global markets, the situation, not even macroeconomical events, but also international events and the effect they got it on our lives and our assets. Okay, let's take a look on the screen. First of all, we're gonna check the calendar because early this week we have seen also. Let's start with Europe, right? European Union, they will publish the PPI, the price PPI, prices on production index. Why is important this index? Because it's usually an index that it gives us with a predictive nature the potential future inflation. The thing is, this index has been showing not only in the case of Europe, but even in the case of US economy, early in Chinese economy during the 2023 last year, negative numbers, negative ratios, which means like actually it's not even showing us an increase of the prices, even showing us a decrease. As you can see, annually minus 10.6% prices on production index. It means actually that the industry of Europe are getting a depression. Yes, it is. I mean, the mainly industry of Europe is Germany. And also we have seen the trade balance of Germany decreasing. So it could be a signal, something I mentioned in the previous videos and reports. Risk of deflation and also a global recession, a drop on a global demand. That's why probably the oil prices are not rising regardless the tensions in Middle East. Why? Because globally speaking, the industry around the world are reducing the speed, the production, and that's why we can see prices dropping and also a decrease on the supply. Now, there is another thing important to mention here, which is considering this situation, we are facing not only inflation problem, which apparently disappeared. We're gonna also read the comments done by the officials from Federal Reserve regardless this topic during this week. Susan Collins, even Mester, they have been mentioned what's the situation of inflation and even their concerns about the risk of inflation. It's not even a risk of inflation. Maybe if these numbers we mentioned early this week about Europe, and by the way, by the end of the week on Thursday, China was published exactly the same numbers, negative PPI index, which also again sounds deflationary risk. Then inflation is not a problem, but actually deflation could be the problem in the coming months. I mentioned this, I'm highlighting this because it's not been speaking of on many of the financial blogs I can see in the mornings, and I believe is probably the next problem we're gonna face in the coming months. Deflationary risk. Inflation is reducing the value of your money and your assets. Deflation actually is destroying the structure of your economy because it's causing a reduction of the production of goods and services, and therefore a contraction on the size of the economy. They are not talking about this yet. They may talk about this in the coming meetings the next month, and by then you're gonna be thanks to be follow this report because we mentioned this early at the beginning. Okay, saying that, let's go now to check few different things. We have mentioned this problem. We have mentioned the numbers from Europe, the drop also in the numbers from China in terms of this issue. Trade balance from Germany, I was saying it was also decreasing. It was minus 4.6% in December, while the expectation was minus 2%. So it was more than double on the depression and decrease of exportations of Germany, which is the main country, the main exporter of European area, the main industry. So bad news for Europe. Still, regardless that, one of the main things that is causing me watch this with certain skepticism is like skeptical is the evolution of the stock exchange in Germany, which is here. As you can see, super high, is going to top levels, but pay attention, be cautious on those levels because everything seems to be going in the wrong direction. If you see on a stock exchange, if you see actually the German assets rising, while the macroeconomical numbers from Germany are showing us recession means We don't know who is buying these assets. This movement is really suspicious and therefore could be a fake or a trap bullish movement to detonate or actually cause a bearish market suddenly. Okay, so pay attention to those numbers and follow him closely. We also have mentioned last week on our last report and also this week the news regarding China and eventually rumors of new plans for re-stimulate the economy. Well, this week we know that Xi Jinping, the president of China, was actually asking a report of the financial situation of the markets in China, and just by the fact that he was paying attention or giving concerns to this, mainly all the investors assumed that good news are coming from the Chinese market and therefore could come in new stimulus and announcements in that direction. We have seen the Hang Seng Index here and Shanghai Composite here. Both of them saw last week and this week, ending week, movement that proved that mainly the market is receiving with optimistically these comments. The previous week it was about the interest rate cuts from Bank Popular on China, and also rumor of new expenditure, new packet of expenditure, new stimulus economical packet of $278,000 million in yuans. Today, this week actually, what we got is also the Chinese announcement of this interest of Xi Jinping of plan kind of recovery for the stock exchange in China. And as you can see, a stock exchange, this is Hang Seng from Hong Kong, but also Shanghai, both of them dropping since last 2023 summer, which was showing to us. While the US markets are rising, you can see here, for example, the SP 500 mini futures breaking up 5,000 points, new top record. In the meantime, Chinese market are still dropping, which also is giving us a kind of divergency that should be a concern for many traders, especially on equity. Okay. So saying that, let's take a look also on the comments from central bankers. We also got, let's take a look what Meller was saying. This is very interesting because Meller was actually saying something in my eyes could actually push the market up and give certain stimulus. I was reading the whole speech. I was just reading the transcription of the comments she was doing, and I was surprised because certain comments she was expressing her concerns about cut interest rates too early because inflation could be still a risk. You know, there is no risk. We actually facing another worse risk, which is deflation, which is the other case. But still, I'm just giving to you in a kind of top prediction for the coming months. But she was expressing her concerns about inflation risk and cut interest rates too early. Okay, fine. But on the other hand, she was also saying that keep the interest rates high for such long could damage the US economy. So what exactly are you trying to say us? Are you trying to say us that you want to cut interest rates, or you are telling us that we should keep the interest rates untouched? Finally, thanks God, she was ending this saying, I expect the Fed to gain the confidence to cut later this year. Finally, you actually take a position. She's expecting the interest rate cut. And I think this is one of the reasons why the market was rising strongly. And we have seen that a positive, very positive market early by the middle of the week and closing the week on new top records. Susan Collins from from Boston. Susan Collins from Federal Reserve of Boston was also saying, we need more data before we support the interest rate cuts. Negative for the market, negative for Wall Street. They don't like this. They don't want to hear this. But she also say it's possible that in the future interest rates will be higher than the previous levels before pandemic. Which means like the new normality on interest rates, bank system, fixed income is higher interest rates than expected before all those years before pandemic, before COVID, when interest rates were actually super low or even negative. Okay. Also, as you can see, trending topic, it was the interview by Tucker Carlson to Vladimir Putin, which actually could cause certain increase on the tensions between NATO, between Russia. We have also seen how by Wednesday, Thursday, NATO was actually making a statement. Sunak, Slot, Macron, And the heads of Norway, Finland, Poland, and other members from NATO were actually manifesting that Europe need to get ready for a war with Russia, and the tensions are increasing. We don't know why we need to get ready for a war with Russia, because we have no issues whatsoever with citizens there. But our leaders, one more time in the sad history of humanity, trying to push us to a self-destruction war. And there is many reasons for this, probably US elections, blah, blah, blah. The imminent collapse of the administration of the United States with Biden, which is not getting any kind of support. And what it seems to be the taking of White House control by the new president of the United States, Donald Trump, which is the main candidate for the presidency of the United States at the moment. And we know that he will not support what he defined as a warmongers. So therefore, all of these questions are actually causing certain controversial maneuvers between Iran, China, and Russia in Middle East, while United States and UK are actually attacking pro-Iran rebel groups in Syria, Iraq, or Yemen. It's another topic that could cause jump on the conflict. IMF was actually reviewing the growth rate from Russia, giving also the highest high rate for growth for all the economies listed in January report from IMF. And again, the funny topic, the funny title that Global Research was given to this report, it was, is IMF pushing Russian propaganda now? Because they were saying, like, why, how is possible that IMF is questioning the sanctions, economical sanctions applied to Russia? Because either one thing or another cannot be true, right? If they apply sanctions while Russia is still rising. Very interesting topics, okay? What else? I think I'm not missing anything. Well, we can take a look on the markets. As you can see, oil is still rising. By the end of the week, was actually rising on Thursday, for example, by closing to $83 per barrel. And we can see that actually 83 to 85 is an important barrier on the oil prices. I will say that we got clearly, let's move to another chart. We clearly got certain support between $68 to $72 per barrel on Brent. But if by any chance the oil is quoting about $83, $85 per barrel, we probably are facing a new range, a new scenario where the oil gonna be between those $85 to $120 per barrel, which is actually a scenario of conflict, risk, and so on. Only chance that this market actually is not responding the way we are saying right now, and the way we are expecting right now with Middle East, is only if the global economy is officially entering a global recession and the demand of oil is dropping because the industries are closing. In that case, which is something we suspect from Germany, we suspect from China, based on the numbers they are giving to us, this is something could be happening in the background slowly. So keep attention on this, because that's the two potential scenarios on oil. In terms of gold, we have seen how the dollar was rising. Remember this chart? I said this chart like a month ago with you on the report. It was a bullish chart on dollar index. Announcement has a target 104.50 points on dollar index, potentially target 1 month ago, and this is this closing week. Actually, dollar touched 104.50 after a month. So it was confirmed. The predictions, we got it there. And it's very, very interesting to see how gold is reacting in the way we expect, which is dropping. And if by any chance we see the gold is not dropping, it's probably because it's remain in those areas about $2,000 per ounce, because there is still geopolitical risk implicit, and it's the only thing make the gold rise for the last few months, the geopolitical risk. Take a look on the movement on the gold during the attacks from Hamas on Israel on 7th of October, and you will see it actually that is causing certain distortions on the gold price. But if we take a look closely, we can also see what in my eyes seems to be, let me know if you agree or not, an area of weight model completely formed now. So this will be the first, second, third, fourth, and fifth wave, and then AVC correction. Potentially the C movement will start soon and moving backwards the oil price to $80-50 per ounce. Very interesting. Keep eyes close to the gold price. We also can see here what it could see has a head shoulder with a dilatation here, but still, in my eyes, I believe this is a bearish pattern. So it means like if by any chance 2000, which is a kind of neckline, is breaking out, probably the price is gonna drop quickly. So keep an eye on that. And finally, equity in Europe. We just mentioned equity in United States is breaking up new maximums, which is a new 5,000, 10 points, and so on. But in the case of Europe, what is interesting is see that regardless bad numbers, macroeconomic numbers from Germany, which is giving us the same message, recession, 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 be careful. Stock exchange in Germany is keep rising. DAX 40, the main index in Germany, is rising. Why? How is possible? In my eyes, we are probably witnesses of facing a fake movement, a trap, a kind of trap, bullish trap, that could eventually develop a bearish scenario, dropping the prices down again, which is what naturally should happen in a country that is giving a contraction on the economy and its announcement that the business are getting closed. That's the case of Germany, and therefore, if an economy is closing the businesses, you probably will never invest in that kind of economy unless they start to show you certain hopes, certain change, certain signals that invite you to think that they're gonna actually improve something. That's not the case so far, and unless I miss something, all the numbers I have been checking for the last few weeks giving us actually risk of deflation in Germany, and therefore this is very suspicious. Keep an eye on DAX 40 and do not trust those movements. Okay, I think that's all. I hope you enjoyed this video report, and remember, if you like this content, first of all, you can contact me. Let me share with you my contact details. If you just want to contact me to propose any topic you would like to discuss, make a podcast with me together discussing other topics, or even propose any other strategy or asset you would like to take a look, please contact me through the email. Even I can list to you on my newsletter. I'm doing every morning a newsletter with the last top 24 hours news related with geopolitical, macroeconomical effects on the market. And it's completely free. So if you want, I can have you on my list. And mainly, last thing, if you really like it, give me a thumb up, please, and subscribe the channel, just to know that actually the people appreciate this time and enjoy what we're doing right now. I think that's all. Have a nice weekend if you see this over the weekend. If you're starting this and you're watching this market review on Monday, good luck with the market. You got all the last top news already reviewed. So good luck and all the best. Bye-bye.